So if you don't have any cash and you just want to get in real estate because it's cool, you're listening to this, you have 50 grand in the bank and you want to get into real estate because it's cool, put down this freaking podcast and go out and focus on making more money. Forget about real estate. I read a tweet yesterday on Twitter from an anonymous account, as always, that's just said, the people who are trying to time the market in real estate, this is what the tweet said. The people who are trying to time the market in real estate are doing it all wrong. Just buy the real estate and start accumulating real estate assets now. And I just think that there's nuance, and I'm going to bring out that nuance. And of course, over the next 10 years, if you're on a long-term horizon, that's good advice. Like, just buy the real estate, operate it well, and time is your friend in real estate. And timing a market, I totally agree. It's really hard to time a market. You never know when it's going to be a good time. An interesting thing about timing the market, you hear a lot of real estate investors say, I wish it was 2011. I wish I had the opportunity to buy real estate in 2011. It was too easy. Those guys all got rich because they bought it at the bottom. 2011, 12, 13, they were buying assets. It was easier back then. And look at these guys. These properties are worth way, way more. And every time that happens, I want to smack them in the face. Do you realize how hard it is to buy when everybody else is afraid? Do you realize how the entire real estate world had collapsed basically, and 23% of real estate GPs went broke? Real estate people who run syndications like myself, 23% of them went broke. Do you realize that? Do you realize how silly it sounds that you make it sound like that was just an amazing time and everybody knew it was an opportunity to buy real estate? Are you kidding me? And the point that I'm trying to make is that it's always scary to buy. It's always scary. We were having a quick conversation this weekend with a friend. He said, can you believe Robert Kraft brought the New England Patriots for less than $100 million, like 80 million or something like that, 20 years ago? That's such a deal, like no-brainer deal. And I was like, do you realize how hard of a decision that is right then to pony up $80 million to buy something like the New England Patriots football team? A football team? That's a hard decision in the moment. It was a really hard decision in the moment to buy real estate in 2008, 2009, 2010, every year. It's always the real estate going to go up or is it going to go down? Should I wait or should I buy it? And I know that this person had good intentions in mind. And when they said, you can't time market, you just got to buy the real estate. But I'm going to tell you right now, I'm going to warn you that way too many people in real estate think, oh, I got to get in now. And I'm just going to start buying real estate. And they buy shit that doesn't cash flow. They buy shit with no value add plan. They buy shit without an opportunity to out-operate competitors and really add value fast. So they have no competitive advantage. They're just going to buy real estate and hope for appreciation. And they're buying real estate that doesn't necessarily cash flow with a shitload of leverage. And they're not well capitalized. And that's the perfect storm of how to go broke in real estate. Too much leverage and not well capitalized. And no operational advantage and no way to make sure that you can really run these businesses really well. The huge operational advantage in real estate is running the business, leasing, getting people to pay more rent, driving profit. Those are the things that I'm really good at in self-storage, and why I'm comfortable buying self-storage, because I know that I can out-operate everybody else because of my small business experience and what we're doing and how we do what we do. So if you don't have any cash and you just want to get in real estate because it's cool, you're listening to this, you have 50 grand in the bank and you want to get into real estate because it's cool, put down this freaking podcast and go out and focus on making more money. Forget about real estate. It's not a good time for you to buy real estate. It is way too risky. The market, the real estate interest rates are going up. It's not a good time to buy real estate for you right now. So no, don't just go out and buy real estate. But if you're well capitalized, if you have a business that makes money, or you have a lot of family wealth, or you've had a windfall and you have several $1 million in the bank and you know that it's time to get into real estate, okay, do it. Reduce the downside and get into real estate. Start dollar cost averaging in to real estate. That's a good plan. But most people aren't in that situation. Most people think real estate's sexy. They want to be in the space, but they don't have any money. They don't have any operational chops. And people are out there just telling them to go buy real estate and don't try to time the market. And I'm telling you right now that that's bullshit. This is a terrible time with rising interest rates and a looming recession. This is a terrible time to come in and buy real estate right now that doesn't cash flow. Maybe I'm telling you what you don't want to hear. Maybe you listening to this thing right now, maybe you listen to me talk on this podcast Maybe I'm telling you what you don't want to hear, and that's fine. I'll tell it to you again. If you don't have a lot of capital, if you don't have the ability to go low leverage on a piece of real estate and you need an SBA loan at 90%, and you don't have an operational advantage, a clear way to add value to that property, what the hell are you doing trying to get into real estate? Focus on making some money. Real estate is a really good way to build wealth and grow wealth. It's not a great way to generate that first bit of money for yourself. It's a super capital intensive business. It's got a long life cycle, and leverage can bite you and you can lose everything if you do it wrong. So take it, you're not paying anything for this advice, so take from it whatever you please. But listen, the only way you can lose in the real estate game is if you get strung out and you have debt and you're over leveraged. It's a story as old as time. If you have too much leverage, it's not fixed rate debt, or your rent goes away, or any number of things that can make a property less valuable, you're underwater in a heartbeat. A friend of mine sent me a self-storage facility in the DMs and said, "Hey, Nick, I want to do an SBA loan on this property. I want to get 90% leverage. I want to put down very little money. And mostly I want to do it for the depreciation, the tax dodge, as they said." I almost shook them. I was like, what the hell are you talking about? You're going to lever up 90%. You're overpaying for a property. There's almost no cash flow. What are you going to do with this basis someday? Like, that is the number one way to go freaking broke as a real estate professional. To go broke. And you think that's a bright idea because real estate's cool and you don't have much cash and you want to get in on the gold rush. I told my friend he was an idiot and he shouldn't do the deal, and luckily I think he's going to listen to me. But you see it all the time. You see people try to get in. You see people thinking it's easy. You see people trying to do it without very much money. You see people taking on too much leverage. And those are the people that if they make a couple bad decisions, they don't know how to run a business. They don't know how to predict revenue. They don't know how to drive revenue, keep tenants coming in, keep the property clean, keep it well maintained. Those are the people that go broke when interest rates go up 200-300 basis points in a couple weeks. So, or a couple months. Over the last 4 months, we've seen interest rates go up 200 basis points. And a lot of people will go broke. Some of the real idiots who over leveraged on not that good assets because they thought it was a thing to do. And they read a tweet that said, you need to just get into real estate. Told them to do it. And it's going to be their downfall. So don't make those bad decisions. Don't be that guy. And maybe you start focusing on small business. Maybe you start focusing on making more cash, earning more cash at your W-2, whatever it is. Focusing on entrepreneurship. That's my favorite path. That's the path that I recommend you take. That's the path I took. Number one, learn business. Learn how to sell, manage, market, hire, fire, run a company, get people to do what you need to do, delegate. And when you know how to do that stuff, real estate gets a lot better, a lot easier, and you can have a real competitive advantage because so many people think real estate is just a passive income thing where they're going to go buy a piece of property and laugh all the way to the bank. And that's not the case. You got to know how to run a business. And if you don't, you're taking even more risk. But if you do, it can be beautiful and you can disregard everything I'm saying. And if you know how to buy a property and you know you can increase revenue, you know you can make it more valuable, then go ahead, lever up, take that risk. It's all on you. But too many people are doing it the other way.
Big news, guys. I created a free PDF that details my method on how I analyze a self-storage facility and figure out what it's worth. Give me a pen, the back of a napkin, and a couple metrics, and I can figure out about what the property is going to be worth to me. If you want to download this PDF, click in the show notes, the first link, and you can give me your email address and you get a email right away with 4-page PDF that outlines exactly how I think about underwriting or giving my initial analysis on a self-storage facility. Again, click the link in the show notes and you're going to get that document for free. This episode of The Nick Huber Show is brought to you by RE CostSeg. If you want to maximize your bonus depreciation and minimize your tax liability, make sure to do a cost segregation study on real estate you've recently acquired. RE CostSeg offers the lowest priced, fully engineered studies in the business, and you get a virtual site visit with a quick turnaround. They did 30 plus cost seg studies for me over the past year, including a short-term rental, along with my self-storage facilities. And I'm also an investor in the business, along with my good friend and CPA, Mitchell Baldridge, who you all know. To learn more about how bonus depreciation works, listen to episode 75 of The Nick Huber Show, or visit recostseg.com to go ahead and get a free proposal that outlines the cost of the study and your potential savings. Thanks again, recostseg.com.